Not because people want to wake up, because they are scared not to. But somewhere in that city, one person woke up without an alarm. The trader who turned his alarm off 2 years ago. 6 a.m. The alarm screams, cold water. You were not ready. The subway is packed. Nobody is smiling. Not one person. You arrive, the door feels heavier every single morning. Your boss drops papers on your desk without eye contact. You sit under a flickering fluorescent light. Gray walls. Another day. You open the same spreadsheet you open every day this year. The clock reads 9:01. 7 hours, 59 minutes remaining. Your phone buzzes. Not a trade alert. Your landlord again. You stare at the screen. Nothing on it excites you anymore. Your boss walks past without looking at you. Same as yesterday. You eat lunch at your desk. Tuesday feels exactly like Monday. The clock moves at half speed when you need it to stop. 2:30 p.m. 3 hours of work done. Looked busy the whole day. 4:58 p.m. The longest 2 minutes of your entire working week. Friday. Payday. You let yourself feel a small flicker of hope. Gross salary $3,800 before anyone takes their cut from you. Federal tax, state tax, health insurance, debt payments, all lined up. What is left? $1,100 for the next 30 days of your life. 23 cents from every dollar you actually worked to earn. You did everything right. School, job, hard work, still not enough. There is a wall you can feel, but you cannot see it. Not built from stone, built from hours that were never yours. The question is not whether the wall exists. It is whether you choose to stay. Across the city, no alarm, no commute, no boss waiting, just a clean desk, a coffee going cold, 3 glowing screens. He does not rush to open a chart. He waits for the setup. First, check the higher time frame, weekly, daily, then the 15-minute. He opens TradingView. The 15-minute chart loads with fresh candlesticks. He draws horizontal lines. Support, resistance, clean and precise. Price approaches the support zone. He watches. He waits. Not yet. A bullish engulfing candle forms at support. That is the signal. He checks RSI. Oversold. Momentum shifting upward. Conditions aligned. He opens pocket option. Asset selected. Chart confirmed. Ready. Trade direction. Call. Trend supports it. Signal confirms it. Expiry 5 minutes. Amount $200. He does not second guess the setup. One click. The trade is live. Countdown begins. He leans back. He does not stare at the screen the whole time. That is a rule. 4:40 on the countdown. The candle closes above entry. Still on track. Green. Win. Plus $380 profit. 5 minutes. Trade done. But you are only seeing the highlight reel. That is the problem. Last Tuesday, minus $240. A setup that looked perfect and was not. Thursday before that, minus $180. Entered one candle too late. Some weeks, losses outnumber wins. 3 trades, 1 green. The difference is he knew this would happen. He planned for it. 2 a.m. The room is dark. Only the monitors are awake. He has been at the desk since 10 p.m. 4 hours of charts. 6 browser tabs open. All different time frames. All telling a story. His eyes are red. The energy drink is empty. He keeps going. A losing trade from 11 p.m. is still showing on the screen. He does not close it in anger. He studies what went wrong instead. Most traders will click away immediately and forget the losing trade. Then open another trade. The revenge trade. The account killer. 80% of new traders make this exact mistake within the first month. Not the losing trade itself. What they do immediately after it. The emotional cycle is the same every single time without exception. Win, overconfidence, bigger trade, big loss, panic, revenge, account gone. The platform did not take their money. Their own reaction did. Here is the number that changes how you see trading forever. 80% of new traders quit before day 90, most in month 1. Not because trading does not work, because they expected a shortcut. They found a discipline test disguised as a money-making machine. If any of this sounds familiar, you are not alone in this. This is exactly why I built my Telegram channel at Easy Austin. The system, the rules, the mindset that makes this work long term. No hype, no fake screenshots, the real process. Link below this video. Now let us talk about what separates the traders who actually survive. Rule 1. Never enter a trade without a risk to reward ratio. Minimum 1 to 2. For every dollar risk, target $2 back. A 50% win rate with 1 to 2 risk reward still makes you profitable. Before pocket option, he opens TradingView. This order never changes. He finds the price level where the market has reversed before. That is support. The floor price bounces from repeatedly. Market. He finds the ceiling where price met sellers and reversed. Resistance. Between support and resistance lives the entire trade. Entry to exit. He waits for price to touch support before entering. Never before. Patience at this stage eliminates most of the bad trades entirely. Entry point identified. Now the most important line, the stop loss. Stop loss sits just below support. If price breaks it, exit. He knows the maximum loss before clicking anything. Always, no exceptions. Take profit target, the resistance level above. That is where sellers appear. Setup defined. Entry, stop loss, take profit. The trade has rules now. Risk on this trade, $20. Potential reward, $40. The math approves it. Now the rule that every losing trader skips, the 2% rule. Never risk more than 2% of total account balance on one trade. $1,000 account. Maximum $20 per trade. Not $50, not $100, $20. This is not about being cautious. It is about surviving long enough. One bad trade cannot destroy a properly managed account. By design. Most blown accounts did not fail from bad setups, from bad sizing. They bet too much. One loss hit too hard. Emotion followed. Account gone. Here is what the profitable 5% actually do differently. 3 things only. First, they treat every trade like it has a written rule sheet. Second, they review every losing trade without emotion, like a doctor. Third, they never chase a missed setup. The market always offers another. The 5% are not smarter, not luckier, just more consistent. That is all. Consistency means the same entry criteria every single time. No gut calls. When the setup is there, they enter. When it is not there, they wait. Waiting is a trade. Protecting capital is a position. Patience returns profit. The market is open every day. Missing one setup costs nothing at all. He keeps a trading journal. Every trade logged. Entry, result, what he learned. Not just the losses, the wins too. What worked, why it worked exactly. Over time, the journal shows patterns. Certain hours perform better, certain assets cleaner. He adapts his system to what his own data shows, not someone else's data. The mental game is 70% of trading, not the indicators, not the platform. Fear makes you exit early. Greed makes you hold past your target. Discipline is the only edge that actually compounds over time. Strategies change. 2 years of this process. That is what turned the alarm clock off. Not a lucky week, not a viral tip. 2 years of the same system. The office worker puts in the same hours. The clock owns those hours. The trader puts in the same hours, but those hours belong to him. Trading is not easy money. That message is a lie sold to beginners. It is the hardest job in the world, for the right to be free. If you are ready to actually learn this, follow @EasyAustin on Telegram. Real trades, real analysis, real risk management, every day in the channel. The alarm is going off somewhere right now. The question is it yours?